Accrued revenue or accrued expense? This topic is still under preparation of adjusting entries. Most often, students get confused whether they are accruing a revenue or an expense. One common example is with the accrual of interest. Say, for example, the problem states accrued 3 months interest at 10% and nothing else. Just that. However, a trial balance or a partial list of accounts is given. Then you start to panic. The heck, what's this? What do you mean by this? Am I supposed to pay interest? How to compute? Well, the first thing you need to do is breathe and eyes on the list of accounts. Search either or both notes receivable, notes or loans or mortgage or bonds payable, as these accounts involve interest. Once you find one, smile because now you found a clue. That clue will guide you. It's like unraveling a mystery. One clue leads to another. Recall that to compute interest, the formula is I is equals P times R times T. Therefore, we need the following information to complete this equation: principal amount, the interest rate, and time. So how not to forget? Easy. Utot lang yan. Prrt, prrt, prrt. Okay. Principal amount refers to a specific account related to the interest or the base amount from which to compute interest. Say you found notes receivable amounting to 50,000. Now that's our principal amount, and that's a signal that we are accruing an interest revenue because it is related to a receivable. Had it been notes payable, then that's a sign we are accruing an interest expense. Interest rate. Going back to complete the info, we need the interest rate, which is in our example 10%. Time or the interest period. We need to determine the number of days or months the interest runs. In accounting, that's from the start of accrual for this period until the company's accounting period end. However, since the requirement already stated 3 months of interest is accrued, we need not determine anymore the start of accrual and accounting period end. So, PRT is equals interest. So 50,000 times 10% times 3 over 12 equals 1,250 interest. Note that the rate of 10% is assumed to be per year unless otherwise stated. That's why we do 3 over 12. Then we can now prepare the adjusting entry as interest receivable, debit 1,250, credit interest revenue or income 1,250. We use the interest receivable and interest revenue because remember that the accrual of revenue is that case when we already earned the interest revenue in this case but not yet collected. That's why interest receivable. This time, say you found notes payable amounting to 200,000. Now that's our principal amount, and that's a signal again that we're accruing an interest expense because it's related to a payable. So 200,000 times 0.10 times 3 over 12 equals 5,000. Then we can now prepare the adjusting entry as interest expense, debit 5,000, and credit interest payable 5,000. Remember that the accrual of expense is the case when we already incurred or used something, which is in this case the interest expense, but since it is not yet paid, we use interest payable.